Hello everyone and welcome to this morning's Forex webinar. Thank you so much for taking the time to come along and join us to have a look at what's going on in the Forex market and also the other markets as well. As you know, those of you who come regularly will know we just don't look at the technical picture, the charts, but we also need to see what's happening on the fundamental landscape and related markets. And obviously with the health crisis that's on at the moment, we also need to see what is happening there, because that is influencing, as I said, what is in terms of risk and sentiment. But before we start, may I draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very, very risky business, so please don't ever think of losing money that you cannot afford to lose. And I'm also going to highlight a little story about risk and people coming into the market and really not knowing what they're doing. It's kind of it's funny on one hand, but it's actually quite sad. But that's for later. Very, very quickly, in case this is your first time with us, what we do, David and myself, we look at the market through the prism of volume price analysis. I know we've got, I have people who come along who've actually read the books that are on Amazon. There's box sets, there's individual books, but it's basically looking at the charts, looking at price action, looking at volume, putting them together. What is it telling you? More importantly, what is it telling you that is likely to happen next? And as I mentioned earlier, we also look at the fundamental, the news, and also the related markets. And I suppose the biggest news in a related market that we had yesterday was what happened in the oil market. Certainly with the May futures contract. I believe it's never happened before, where basically traders could not roll over their contract. They tried to sell them. They didn't want physical delivery of oil because there's no storage space, and the price went negative. Impact of something like that would be on the petrodollars. That's something like the Canadian. There was a bit of a reaction in the Canadian, but not hugely, David, was it? It was selling off earlier on in the day. And in fact, the trade that I was looking at yesterday, and I wrote about on my Forex Forex page on Facebook, was actually the New Zealand Canadian, because the New Zealand was a very nice buy. Really since the start of sort of midway through the Asian session, sort of very, very early for us, very early Monday morning. And that was primarily on news that New Zealand has come out of this, was coming out of this health crisis and is kind of reopening their economy. So that took it as that the market took that as good news, and the new Kiwi was bought. And in fact, what I've done very quickly, I'll show you, because it's quite interesting on the Kiwi. And we'll go to the CSI in a second. And I just took a screenshot earlier on this morning. Let's have a look if I can actually pull it over. We'll look at the CSI, the live CSI, and the other Forex specific indicators in a second, because that's what we do here. If I can just drag this over, here we are. All right, just very, very quickly, because I always suggest that we look at the hourly chart for these indicators, because they tell us basically what is happening, what has happened, what is happening, and what we think is going, more importantly, what do we think is going to happen next, because we're looking for a trading opportunity. And we'll start with the CSI. This is actually a screenshot I literally took about 15 minutes ago. So we can see here this is the Japanese yen. That's been rising. The Nikkei has been, everything's a bit wobbly at the moment, wobbly because of oil prices. And you might think, well, oil prices falling, that should be good for equities. Well, it is in a way, but also what it also means is if oil prices are falling, it means there's no demand. And if there's no demand, the economy isn't doing anything, no one's doing anything. So you have to look at it from that perspective. So the Nikkei kind of wobbled like the Dow did yesterday, and I think the S&P, although the Nasdaq is kind of holding up. So we've had a buying of the yen. This is overnight, and we can now see it's sort of a bit of an extreme. This is the Kiwi. This is what's been happening overnight, and that's also at the bottom, and the Aussie is at the bottom as well. So we're looking at extremes at the moment. So what is that telling us on the CSI? Well, we've had nice strong moves in these currencies, so you know, possibly an opportunity for a reversal in the trends that they have been in up until now. But more importantly, this is the key here. This is this section here is actually the London Open, but in fact the reversal in it happened about sort of 4 o'clock our time. It was rising. It carried on rising during London, and as I said, I had it against the Canadian, which is down here because of the oil situation. It really had a really nice move in the New Zealand Canadian. But as you can see here, it carried on rising, and I just wanted to highlight here what typically happens at crossovers, because it was rising nicely, and the crossover sessions like we have now in London, new traders come in. What is going to happen? Are they going to reverse it? And it looked like it was actually going to turn over. It did slightly, then it carried on high, and then it reversed, and that time there, that point there is 7 o'clock our time, which is with MT4 and 5, the time that you have, the timestamp on your machine, it will either be the broker or the meta quotes. I think mine is meta quotes, and it's usually about 2 hours out, which is really annoying, but it's just the way it's just a quirk of the platform. So whatever time it says there, I think you have to deduct 2 hours from your local time, and the New Zealand has been selling off because of this change in risk sentiment, etc. So it's traveled all the way down there, and now it's time to go back up. And that's what currencies do. This is what happened. This is a market of what we call mean reversion. Currencies move higher, then they move lower, and then they reverse. And we as traders, we want to capture those moves either from a position of extreme, not always possible, because we come into this market at different times of the trading day. So we either want to rejoin a move, maybe there's a correction in a faster time frame, which is also tradable, and that is why we developed these indicators. And I'm just going to show them on my MT5 platform, and I've got a couple of other things to show you as well. Basically today, what we're going to have a look at, because yesterday was also an example of that, the New Zealand Canadian was also interesting in terms of its move. That looks like a fantastic move. And getting back to this idea, this issue of crossover sessions, is a lot of the move in the New Zealand CAD, it was like a move of two halves. There'd been a strong move in one session, then there was a bit of consolidation, and then it was picked up again, in fact, just after London. And when you look at the daily chart, you think, oh, that looks like a fantastic move. You know, there's a big up candle or a big down candle. But then when you actually break it down and go into the faster time frames, that may have already happened when you are not at your trading desk. So the session that you may be in or trying to trade a really nice, you know, a move that has already started and possibly has the potential to, you know, to carry on higher, you will only ever capture a small segment of that. And it can also be, that segment could also be really slow with very little momentum. You know, it's what we call a grinding kind of day. And in order to try and get a sense of what is happening behind that price action, is it grinding? It is going to get there, but it's going to take a little bit longer than if there was volatility and momentum. This is where we have to use a chart that is non-time based, and we use Renko charts for both. David's got he uses tick charts as well on NT8, but on MT5 and MT4, what we've developed is an indicator for using Renko. And what it does with the Renko is it's calculated, the brick size is calculated purely on a pip value. So that little brick will take its time. Sometimes they will come out very, very quickly because, you know, if it's 2 pips, those 2 pips are happening very, very quickly. And other times they won't, because it's not time dependent. So I'm just going to show you here on New Zealand dollar, which there we are. And I also want to have because we're also going to talk about support and resistance, because the other one of the key elements of volume price analysis anyway, because when you have a day that it's pips just aren't moving, and things are taking a long time to the move is taking a long time to develop, you won't see that on a time chart. A time chart just works, 5 minutes will pass and you have to wait for that 5 minutes for if you're on a 5-minute chart or 3-minute chart. It's all time dependent. When you move to a Renko chart, this has got nothing to do with time. This is purely to do with price action. Now, the value of each of these little bricks, if you like, here, I will tell you what the value is. It is actually 1.56, because the version of the indicator that I'm using is the indicator itself calculates the optimum brick size. I don't have to put a fixed value in. I sometimes use it on the ATR. Other times I like to have a fixed value. I just, I don't, there's an argument for one and there's an argument for the other. Sometimes I have both versions of the Renko running. I'll have what the indicator is saying. This is saying at the moment it's 1.56, or in other times and I'll have that running, and I'll have maybe a 3 pip going or 2 pip. But that's just something it's a question of trial and error. So essentially, that move there, each one of those is 1.56. How long that took, I don't know. It takes the time that it takes, but what it does, when they start to move like that quickly, you have momentum. We don't have any momentum at the moment in this pair. Why? Because it's moving sideways. That move has come to a point of exhaustion, if you like. So we're having a period of consolidation, and this is where we have to then look at support and resistance. If it's going to move higher, obviously the CSI will tell us as well. It's saying, is it now going to, is it going to break away from these from that resistance up here? If it's not, what is it, where's it going to go downside to go further down? Well, we've got the levels here, and the way we use support and resistance in the indicators that we've developed, but generally, is we use price-based support and resistance, which this is, and the thicker these lines, the stronger the resistance. But we also use volume-based. We have developed an indicator called the volume point of control. Those of you who have the indicators will know. And so we use price-based support and resistance, volume-based support and resistance. And the third way that we measure support and resistance as well is with, as again, if you've got the indicator, we have what we call our Camarilla levels. Now, these are based on price. And when you're in a situation where you're trying to, grind out a few pips and you don't have a nice smooth move that we saw on the Renko chart there, you need to know where you think this price is going next. Not only for a perspective of not risk and reward, it's just an indication of where it's likely to stop next. We've got the support and resistance based, as I said, the normal one that you see on the lines, then we have the volume one, but these are actually very defined levels, again price based, but there's a formula that we've put into the Camarilla, into these levels, and they are really very, very accurate and all sorts of things. So when you get to the S4 or the R4, there's a kind of hierarchy to these levels. Some are more important than others. It's a bit like Fibonacci. People say Fibonacci, the 32 and the 68 are, and the 50 and what have you. They have more significance, if you like. Well, it's the same with Camarilla. But what they also do with the Camarilla is that they work, the way we've developed them is the values that you see on the different time frames. So all the values that you have up to the hour, but not including the hour, those values are recalculated every 24 hours. So tomorrow morning on the 3-minute chart, you will have a different set of values. When you go to the hourly chart, in fact, I've got to take it off docked, otherwise it won't work. There we are. When you go to the hourly chart, as we have here, you see the levels are completely different. because with support and resistance, what we have to do is, yes, we have the support and resistance on the chart that we are looking at and looking to take the trade, but we want to know where we think this is heading to. First of all, to try and get a feel for, not in terms of risk and reward, but how much, if you like, how much of a trade there potentially is in this. So we have to look at the slower time frames. And the beauty about the Camarilla is, the way we've developed is that the ones that are now on the hourly chart are actually are the ones that are going to be there for the rest of the week. So if you like, the daily ones change every 24 hours. So we have them on, if you're doing a scalping, you know where they're heading to. But if you're going to be staying on a little bit longer, what you also want is you want the significant levels at slower time frames, higher time frames, so we know, oh right, so that's where it's possibly going to stop, possibly going to reverse, and we know they are in play for the rest of the week. So if you're trading, if you're a trader that maybe likes to trade New Zealand dollar, that is your preferred pair, because you just like to focus. You've got 28 pairs here, but you like to focus on maybe 2 or 3 or whatever it is. You get to know your pairs, you get to know your support and resistance levels. This will give you that, and then everything that from here on in until the end of the week, you will always have a chart, as I've done here, very plain, just as I said, white background. You can just drag it in and drag it over and say, oh yeah, so when you're trading on your focus chart, you've got this, and you think, oh right, now it maybe stops, and you think, oh, I wonder why that is. You look at the slower time frame, it's reaching quite a significant level. Then you go to VPA and you say, right, let me look at the time chart and think, right, what's it going to take to break through that level? And it will always take volume. Volume is the key element, because nothing will move. If it's a genuine move, it has to be with the price has to be supported with participation and activity. Right. So that's what we're going to do today. A little bit of a long explanation, but I wanted you to see the support and resistance, the 3 ways that we use it. David and myself use it. Those of you who are in the program, it's all explained in the program, and those of you who maybe just have the indicators, that's where you will find it, and that's where we would suggest that you use it. We have students both in the program and just who have our indicators, take the indicators, take the principles of VPA, take what we've got, and then apply their own. I mean, we've had Elliott wave traders, we've got traders who use Fibonacci, they use moving averages. The beauty about volume price analysis and the indicators that we have developed is that you really, once you've learnt the basics and the principles, you can really do what you like with them. They're there. The VPA is the foundation methodology. The indicators then support it, and then what you want to take, you can add from your previous knowledge and experience. Right, that's that one. And what I've actually been looking at the moment, I've got actually Euro Aussie on my Ninja Trader platform. In fact, I think it was a nice short, but don't think that's what's happened to it here. Yes, it's kind of it's kind of pulling back now. But then that's London, as I said. This is again these session crossovers. Nice move down. It was a lovely move down. In fact, on the CSI, that's what I was looking at. Here we are. This is in real time, as we can see here. Yeah, what have I got? I've got the Aussie, now the Aussies coming in on a buy. I've got the Euro, it was looking very nice. The New Zealand yen looks a potential candidate. What have we got here down on the array? This is the strength of trend indicator. In fact, I've got the New Zealand yen very looks like it's nice downtrending, possibly now time to move higher. It will move higher if we have a change of sentiment in the market. So I'll just go and we'll just have to go and see what's going on in let's have a look on investing.com. what have we? We've got the Nasdaq. The Nasdaq's a bit of the S&P is down slightly. The Nasdaq is a bit of on its own, isn't it, David? It's not. It's a kind of pulling away from the S&P and the Dow. Certainly the S&P, the two tend to move together, but they haven't recently. Right, so I'm going to pick up where I was before we started. I'll have a look at the Euro Aussie in more detail, and I'll just pass over to David. If you've got any questions, please just put them in the chat box. More than happy to answer them either on air or you know, I'll type the answers in for you and see what happens.